I remember going to work and wanting to cry on the way to work, going, I can't just, it's just monotonous, boring stuff. Now I love it because now I'm like, save myself money and my investors money. So I'm really tuned in on it.
Welcome everyone to our Hero Capital show. I'm your host Tim Mai, and today I have an amazing guest on the line with us, Matthew Owens. I've gotten to know Matthew now for a good few years, and he's always up to amazing things, big things, everything from raising money for debt funds to raising money for mobile home parks to like credits. What was the other term called? The other type of fund that you do for the not credit repair, but what is that
Yes,
called
the
again?
we have a litigation financing fund, and then we just finished a raise for a debt invalidation fund where we raised about 38 million for that particular fund. I love the alternative financing space. It's pretty interesting.
Yeah. Yeah, just all the things that you're always up to is just yeah, very different than the usual real estate stuff that we do. And so always so good to talk to you. And I know you have now from all the different things that you do, you have acquired over $500 million in asset, raised over $200 million. And yeah, super excited to interview you on this show. Thank you so much for coming on.
Awesome. No worries, man. I love talking to the group and being able to educate all the pain that I've been through over the last 20 years doing this stuff. Just to give everybody a general overview and understanding, I quit my CPA firm job in 2006, so retained the license. It's great for raising capital and investing and stuff like that, of course. But I quit my CPA firm job then, went into real estate. I was a real estate genius for about a year and a half before I got my ass handed to me and punched in the face by the 2008 crash. And I like to say it was probably one of the best things that ever happened to me, just because I learned how to stand back up. And if you haven't taken a punch in the face, you will absolutely take a punch in the face in this business. But since then, we've flipped a little bit over 1,000 houses. We've lent out over 500 million now to flippers in different markets. We have a little bit over 100 million or so in assets under management currently right now. And then we've done a ton of different projects over the years and multifamily, mobile home parks. And I really am loving the alternative financing space. We actually have a cannabis farm that we run. We do a lot of different strategies. And I like those because while I love real estate and invest in multifamily and invest in different assets in that space, including short-term rentals and things like that, I also like being decorrelated from the market for economic uncertainty. And with the war happening, with AI happening, and having that uncertainty, I think being diversified into different asset classes that aren't necessarily correlated with the real estate or the stock market are important as well, even though I'm still bullish on long-term real estate just because they're going to keep printing money. So that's what's going to keep happening, right? But
Yeah.
yeah, so that's been my story and what we do. I've been trying to spend a lot more time with the kids lately and travel with them and things like that. I have a 10-year-old and a 7-year-old. So systems are what help you do that and spend time with your kids. And that's what we've been able to build on the capital raise side, which is pretty cool.
Yeah, you know what? Yeah, all that you built has just been absolutely incredible. So walk us through because yeah, like your whole sort of journey, your whole growth journey from flipping houses to doing hard money lending to flippers to just continue to expand from there. Walk us through how each of those growth happens and your decision making process as you grow and expand.
Absolutely. At the beginning, think I just did what everybody else did, which was, hey, become a flipper, go flip some houses because that's the way to make a bunch of money. And I took a bunch of classes with this organization called Nouveau Riche at the time, which actually was great long term from the education standpoint. It didn't had a not very great of a reputation just because a lot of people didn't ever take advantage and do anything with that education, and they thought it was a scam. But at the end of the day, it was really valuable for me just taking the courses, and I guess maybe gave me false confidence to quit and go into jump into real estate where I'm like, I got my first deal under contract and I hated working at the CPA firm, trading time for money nonstop. I was bored and just honestly in pain. I remember going to work and wanting to cry on the way to work, going, I can't just, it's just monotonous, boring stuff. Now I love it because now I'm like, save myself money and my investors money. So I'm really tuned in on it. But in the beginning, I think you just go through that motion of, okay, hey, this is the fastest way to make money. And I look back now and I say, crap, why didn't I learn how to just raise money first? because then I would have held all of that. And I did the math and I would have had over $50 million of net worth if I would have never sold them and just held them. That's a painful math lesson to learn through that process. And then you realize after starting to do a lot of them and needing to turn the lights on, we went through that process in the beginning where basically we were flipping quickly. We got an office at the World Trade Center in Long Beach on the 23rd floor and thought we were the shit and realized we were not the shit. We didn't know what we were doing. And I had my stepbrothers were two partners of mine, both computer programmers and electrical engineers. And I'm supposed to be the sales guy that can sell real estate as a CPA. Great, right? And I don't have a personality either at that point. And then we all quit, went into real estate full time, jumped into this thing, and we're like, how do we get as many as we can? And we were flipping like 5 a month at that time. It was easy to buy houses then and resell them quickly. The appraisers just magically appraised them for 20% more at the time, and you became an immediate profit center, right? And it was really interesting. But once you start to do enough of those and you realize how much of a crazy grind that is and how hard it is to scale that, at one point we were doing 10 flips a month, and you have to be crazy operationally sound to do that. You do take hits on deals. There's problems and delays and contractors theft and things like that that you go through. And I feel like that is the rite of passage to go through so many individual problems that where now you stop becoming emotionally hurt by those items. Things that happen, you just start to focus on the solution instead of the problem, instead of reacting emotionally. And that's what flipping those 1,000 houses did for me, is it immediately takes away all emotion out of the problem. So that way I can say, okay, write down 50 things that are going to solve this problem. And when you start going into the multifamily space and the larger space, when you start doing a fourplex or a sixplex or a bigger unit and you realize, oh my God, I just made 3 times the profit instead of a quarter of the profit that I make on an individual single family home at one time for the same amount of work, just on a little bit bigger of a scale. And that's when you start to understand the multifamily business. And we've done full turnarounds of full gut job renovations on 50 plus units at a time, on even some where we bought one building for 150 grand. There was 18 units that we put 800 grand into it and sold it for 2.5 million a year and a half later. And you realize like those types of deals are really dope, and you start to get excited by that stuff. And then you start to, when we started raising more capital than we needed for our own flips and our own projects, that's when my friends started coming to me and saying, hey, we need capital too for our deals. And so I started raising capital for my friends' deals as a lender on that space where I could secure with first position money. And I got hooked on the lending deal, on a lending space, when I did a loan inside my 401k for $500,000 secured at 65% loan to value at a 14% flat rate. And then my 401k sold the loan, didn't borrow the money, sold 450,000 of that $500,000 loan to my investor. So I didn't have UBIT or anything because I sold it to them. I wasn't leveraging. And they made 8% on their money and I retained the rest. So I was making literally a 68% return on my 50 grand left in the deal. And when you start to understand interest rate arbitrage is when you really start to get interested in the debt side of things. And then you start to get disinterested with the debt side of things when you have foreclosures and headaches and deal with theft on borrowers and all the headaches that go with it. And so now we just started buying the debt instead of originating the debt. And it's a much easier play to not have to talk to borrowers and deal with all that stuff. And we make interest rate spreads without having to do that and having the right due diligence process in place for those types of strategies. Yeah, so that's where a lot of this stuff was born. And we learned the lending business a lot of the way through doing seller financing on our properties to people's IRAs and 401ks on our single family homes that we're flipping, or structuring 1031 exchanges where we can hit their sales price, their down payment, and their loan amount, and being the bank for the rest, and then selling off that debt to insurance companies and banks and our other private investors. So you start to add these tools to the tool belt over a period of time as resources develop and show themselves to you. And every new asset class, you take a punch in the face and learn some new lessons, but it creates a long-term income stream that you can diversify into. And so it becomes really exciting over that time. Sorry, that was very long-winded,
Yeah,
but it's a lot of crap that we're doing.
that's
So
that's Yeah, that's amazing story. And then as like when did you start to expand beyond the hard money lending business or and each type of asset that you expanded into, what has been your investors' response has been? Have you have been having to build a new investor base or are you able to convert much of your existing investors into whatever the new ventures is?
So I position myself a little bit differently with my investor base. A lot of everybody on a lot of people on the call, if you're focused on multifamily or you're focused on mobile homes or one specific asset type, it becomes difficult to position it this way. But what I've done is position myself more as a financial advisor, CPA, tax person. I even sit down for free and will help my investors with their tax position and help them and add that value to them and give away a lot of time. I even help my investors and my fund managers with financial situation, getting their personal financials in order, and some of the key processes to do that. And I'm actually teaching a bunch of military members shortly, this big group of this nonprofit group, on the financial foundation that you should be setting up first without going into the investing side. Because if you realize you have no business asking for the sale until you've actually built the trust. And you build
Right.
the trust through just adding tons of value. So if you can go do education on IRAs, on 401ks, on tax mitigation, on legal mitigation, on how to structure your investment portfolio as a whole to give you appreciation, inflation hedges, cash flow now, and really be an advocate for your investors, because really they should be investing in some value add apartments and value add projects with built-in equity to help with the downside risk, but they should also be investing in immediate cash flow to get them their needs right now too. And so by going out and becoming a specialist at a lot of different assets from the due diligence side and learning how to run the operations side of the business, because we don't raise for outside people, we primarily raise for our own stuff. And or if we're directly involved in the asset specifically, like our mobile homes, I work with another company, but I stepped in as CFO and helping with that company directly on a lot of their assets. Most of our stuff we are directly operating. And so when you have that infrastructure and you can set up, here's the asset management processes and procedures, here's the underlying property management and construction management and the overall quality control project processes and procedures at the asset level too, then you can really dive deep. And when you're looking at different asset classes and you're learning, hey, had to go from flipping to multifamily and mobile homes to lending, which all is correlated because it's the same type of numbers, now to the debt validation financing. I had to really dive deep into the operational structure. What happens if I have to take back over that debt? What's my collateral to value and what's my safety precautions behind that? Which is I'm at 25% of value, not 65 to 70% of value on real estate. And I'm collateralized against $20 million worth of receivables on a $5 million capital raise that has a historic 85% collection ratio on those receivables that are thousands of receivables, as well inside this. For every $5 million, it's 3,300 receivables with an average of a $6,000 balance. So you have to look at each scenario and each asset class independently for the collateral versus the operational performance, but also what happens if they don't pay, because that's what I had to learn the hard way on the lending business, is what happens if there's no payment involved. What do you do? What's the action steps you have to take, and how fast do you have to take them? I've lost so much money in the lending business being too nice and not having I'll say the F word, pay me mentality, right? So like really going through and saying, yes, I want to help, but here's procedure, no emotion at all, and really having proper procedure in place on every asset class so it doesn't cost you long-term money on these things, and having that dialed in. I think now with AI and some of the strategies we're seeing out there from an operational standpoint, we're going to get more and more efficient across the board, which is really interesting. Some of the things we're seeing on the AI side from the marketing perspective, but also from the operational perspective. We just brought in somebody to full time go look at every single system we have and audit every aspect of our business for AI implementation implementation and automation. We're just going to invest heavily in that side because it's so key. But yeah, these are some of the things that we look at for sure.
That's very cool. So I understand about educating your investors around taxes, around finances, finance, and things like that. When it comes to introducing a new investment opportunity, especially when it's, yeah, an asset that they might not be familiar with, do you do any education around that assets before you start to ask them for the money, or like what is their process? I'm trying to get through like what is their thinking process or decision process might be. I'm sure you have some investors that says,
What is
Matthew,
this? Right.
whatever you tell me to invest in, I'll invest in that. And then you have some that's, hey, well, I don't really understand this investment type. What
And
is
that's
your
a
process
hundred
there?
percent the case, right? There are certain investors, and the more sophisticated investors are really going to do a lot more. And that's the exact investor you really want. The non-sophisticated ones are the ones that just trust you. That's great, but those are the ones that can be the biggest problem because they didn't understand the deal up front and stuff like that. And so we do a significant amount of work up front on this when we're switching that over, which is one, detailing out a full email sequence for a month and a half long of education leading up to a Q&A, always detailing, deep diving every aspect, trying to be very clear in our email communication so they're easy to read, bullet point finances. We're even using Notebook LM to create short little 5-minute overviews of, hey, what is this business? Why is it a quality deal? That give you short animation videos basically that give you a very quick overview of that deal, because it's like we also do little tricks like here's a quick 5-minute overview video giving just the highlights of that deal. Watch that. Nobody wants to watch a long-term webinar, a 45-minute webinar at all. Half of them don't even watch it even before they invest. And I'm really like, dude, at least read the documents, please. But they don't even do that. And so at the end of the day, it's a matter of how do you get through to them with the TikTok mindset of they got these short reels that they got to watch and get them to continually do that and take tidbits of information in over a period of time. So we educate over a month and a half period at the very least. And then we're consistently educating through our content out there and teaching about these specific strategies as we go out. But it's all a matter of, and it's also relating it to something they know. If it's real estate, we say, hey, in real estate, this is this percent loan to value. In notes, this is this percent. If we're showing the differences in our promissory note structures, we might have our debt fund for our lending, we might have our litigation financing, or we might have our other financing arms of our portfolio financing over here. Different, and showing the differences between each one on a clean chart, right? Having those types of marketing pieces that you can go out and relate it to what they already know helps bridge that gap significantly. And if you say, here's 5, 6 bullets. This is the reason why this is foolproof, right? Hey, you get a preferred return and then 100% of your money back first beforehand. Like, for example, in our cannabis farm that we run, we're doing an expansion on it, right? But we're already at profitability. So being able to say we're already at profitability, being able to say it's run by an operator that has 20 years seasoned experience, we are getting our licensing and increasing our revenue by 85% by with no increase in cost by changing licenses. We're adding this extraction lab, which will add 1.5 million in revenue. We're going to have a full portfolio that are the properties free and clear with no debt on it, and it should make 4.5 million of net income on a $10.5 million capital stack with no debt. Like, you're going through every line item that's like, bullet, this is dope, and having it like in their mind so it's super clear. They can be like, how do you lose money on this with all these things? That's what you have to
Mm.
make them believe is I've done so much homework on this that the risk in their mind is far less than they believed it to be in the beginning before they had the knowledge base. And of course, you have to tell them there's obviously risks involved with every asset class, with every investment, and you got to drive that home almost to the point where it scares them a little bit, but at the same time, usually if you're straightforward and honest with them and they trust you, then they're going to get over that because you can tell them that, hey, these risks get mitigated by having a good operator that has these operations dialed in, that does these things. And these are the things that I'm doing every month, every quarter. So you know what I'm doing and all the work I did. We also come with a fund manager package, which we give to our investors too, the sources and uses, videos of different aspects, structuring videos. When we're going out to fund managers to help raise for us, which is the key, right? Everybody here wants to have another fund manager raise for them. It's the most efficient way to call it $50 million is having 51 million dollar fund managers versus $50,000 investors, right? But make it easier for them. Show them, teach them how to raise for you. Go through and give them interviews with your team that you wouldn't give to anybody else or you normally don't share. A full deep dive model overview of your financial model in every place where you are conservative so they see how you think about these things, right? Think about you being scared to death about investing with somebody and raising your money. How do you give them everything they need in one package? We even develop a website. We have a Q&A that we put together for every single question any investor has ever asked, and we give it to all of our investors because sometimes they don't know what questions to ask. So how are you going to get them over their fear without
Mm.
them knowing all the questions they should ask in the first place? And it might bring up some more fears if they don't like the way you answered that question, but it'll get the conversation going as well so that you're actually communicating and building the trust. And at the end of the day, if you can't get over the risk of a deal, of a specific risk involved, then they shouldn't invest in the first place anyways. But now you've said, hey, no problem. If you're not cool investing, it's not for everybody. It's a different asset class, and they respect that more, and they're more willing to go into the next deal. And if you do another round of that deal and you show, hey, see, this did work out really well. If you want to come back in, then many of them do step back in at that point after they've seen the performance. Remember, the nurturing is like a 2 year plus type deal, right? It's a matter of building this giant asset long term of all these people that work with you. So
That's phenomenal.
hope that helps.
Yeah, that helps a lot. And I know yeah, you have different funds going all the time, it seems like. And they're running concurrently, you know, how in a lot of times in the syndications we try to stagger our deals where it's like one after another so we don't
Right.
end up raising multiple deals at the same time. How do you manage that process for your investors? And yeah, because you do always have something available
Yep.
for them to invest in.
So first of all, managing multiple fund launches simultaneously is not easy, and I do not recommend it. These deals came up at the time for projects we were working on and things like that that we looked at. We took 6 months of due diligence on some of these things before we decided to launch for them as well. And that's when the need came up for the capital to be able to raise for them. So it's not always opportunity, and it's not always planned perfectly. We are not doing a ton of like multifamily, for example, where you have a hard and fast deadline. I'm
Mhm.
actually funding some of these things beforehand and then get reimbursed afterwards with our own capital and backfill in some cases, or at least can move the projects forward as we raise over a period of time. But it's a matter of that consistency going out to these people over and over again and educating, right? So we'll do a month and a half campaign, another month and a half campaign for a new deal. And then after that, maybe it's a mix of both of them as we fill in those gaps. And usually it might take 3 months or 6 months sometimes even to raise all the capital for a deal. But at the end of the day, it's a matter of pushing through and slowly getting there over a period of time. And we just happen to have that short-term capital ourselves to be able to bridge those gaps and things like that. Now, when it comes to the operational performance on the back end, that's a whole nother thing, right? You have communication with your current investors, and the more frequent, the better. I'd say quarterly at a minimum, but sometimes a quick update on a monthly basis can be great too, especially in the first 3 months or 6 months of that investment. If you come out and start educating and teaching for the first 6 months every month, and then after that, maybe you're up and running and there's less value add or less things happening, but you're able to go down to a quarterly basis. But then again, you've got to continue to reach out to those current clients and continually nurture them and make them feel comfortable, answer any questions. You have tax Q&A from them consistently through that process, communicating with them on when K1s will come out consistently, but it can be set up. And a lot of this is reoccurring on each individual fund that's the same thing, just on a little bit different of a format. We utilize Google Sheets a lot and Syndication Pro for our tracking, where we have our waterfalls built. We have all our investors listed. We have all the information all formulated out. Luckily, Rick on my team is a genius when it comes to financial modeling. And I have these two 47-inch wide monitors behind me for financial modeling. So being a CPA, so that helps a ton. But being able to build the structure and the process for each fund allows you to put someone in place to be able to hit those bells and give me updates consistently so I can manage them to manage the other assets and the CFOs. Each fund has its own like COO or CFO involved in that fund, an operations person involved, and then we have the communication person, usually the same person communicating over all portfolios as well, with me and my team being the leadership. Everybody on my team's been with us for 10 plus years, and the whole vision with the company is everybody is financially free within the company. Otherwise, we're not stopping until everybody's completely financially free. If I wanted to stop now, we could, but that's messed up. These dudes have been with me for 10 plus years. That's not right. You got to be like, no, sorry, I'm
Yeah.
not going to replace you with AI. I'm going to teach you every aspect of AI
I
so
love
that
it.
you can actually like do more for everybody and make us more money.
So with all of the different asset types that you have for investors to invest in today's market, have you found some are easier to raise for than others?
As far as asset classes go and things
Right.
like that. Yeah,
Yeah.
I'd say right now, I think multifamily is probably the hardest one because of the turmoil we're seeing a little bit in the market at the moment. And a lot of investors got harmed when the rates changed. And so you see a lot more skepticism out there. It takes a lot more education about who you are as an operator and why you're different. And that's not going to happen to you, or at least going forward, it won't happen to you if it happened to you, because it happens to everybody. Everybody takes that punch. So if you did happen to you, realize that there is light at the end of the tunnel and learn from that and push forward, because it's one of the best things you can do. The difference between the person that's successful and not is a person that quits or doesn't quit. So no matter what, you can repair that aspect. But really, at the end of the day, multifamily, I think, is a little more difficult just because of that previous issue with the market and some changes there and some people being hurt. I'm seeing out there that people are interested in 10% plus cash flows more and more when you're dealing with alternatives. And some investors are definitely spoiled in the 15 to 20% range, and those are alternatives, right? Things that people are not as comfortable with, like our litigation, or I mean our debt invalidation fund. The way we structured that is we were lending out at 33% to the clients involved that own the receivables, and then we were giving our investors 20 and giving our capital partners 25, and it's paid interest only on a quarterly basis. How easy is that to raise when the fund partners make the 5% every quarter also from the start in an interest only note, and the investors are making 20? Like, that was like, okay, like
Yeah.
I should have been able to raise 100 million for that thing. You know what I mean? But like at the end of the day, you look at that kind of structure versus, hey, in a multifamily,
Mhm.
you might make 4 to 5 in the beginning. Maybe it's 6 or 7 if you're lucky, depending on the asset while you're doing the value add. But maybe you're looking at 7 to 8 long term in cash flow and a 15% IRR. While there's a place for that in the portfolio, it's important, and you don't want to allocate all that to the 20% range. It's an easy sell to allocate some money for these alternatives in this space as well, as long as they're educated enough to be able to do that. And so I also find people are a little bit skeptical right now just because of the war that's happening right now, the oil issues, the AI getting, when I have a concern with AI as well, of course, where they're going to be massive abundance or we're all going to be enslaved. I don't know which one, or dead. I don't know. I thought plumbers and electricians were safe, but really now China has robots that are paving entire roads without humans at all. And I'm like, can we buy a robot to just follow a bunch of plumbers around and electricians around for 6 months, buy 10 of them? And I'm like, then all the robots have the knowledge, but I don't know if we're there yet. But I just want someone to do my dishes and my laundry for the rest of my life. So that's it.
But the dishes and laundry, it's probably going to be the one of the first robots that's going to come
Oh,
out.
dude, I can't wait. Yeah, it's going to be great. Then they're going to have babysitters, and that's just a whole nother horrible thing. So that's not a good idea.
Yeah, exactly. Technology is definitely moving pretty fast. And so, talking about technology, I know you mentioned about having websites using NoteLM to do some of these question and answers. Share with us some other tech tools that you have implemented in your business to help you raise money easier and faster?
Yeah, absolutely. So there's a ton, and we can do probably a whole AI class on just the things we're implementing right now. And I feel like I don't know crap because there's so much happening compared to what's out there. Things are changing every single day. It's unbelievable. And something that we tell you, or I say yesterday, is going to be invalid in a week or two, which is crazy to see that. But if you don't get on this board, on the AI board, you are going to be gone. Like you will be useless. You
Yeah.
will not be able to, you're not going to compete at all. So some of the things, for example, that we're working on right now is one, just automations and integrations. Those things are not that difficult to do, but Rick on my team is building through Claude our AI assistants and things like that consistently right now. He's putting all that together. We have the ability now to where AI has been able to we upload all of a bunch of emails that I used for marketing and then a bunch of emails that I would use for everyday conversation in my emails, like 50,000 emails. It
No.
created an avatar about how I write and how I speak to people over email, which I realize I need to stop the LOLs and the emojis. And I'm like, oh crap, take that off. And I'm like, don't take, yeah, get that out of here. And it created who I am as a persona, which is I have a dad vibes hat. I'd like to talk to other dads and stuff like that about how to create financial freedom. I'm very, I'll say, pro libertarian type person, anti-government type guy. I go through and it learns everything about how you speak and write, and it can write our emails now and get us 75% or 50% or 25% of the way there, depending on what types of emails that you have, and
Mhm.
get to the point where you literally can structure this where most of your emails can be written already in advance and where you don't have to think about them as well. It's really freaking cool. And yeah, someone has a question about Claude specifically, which was why did we pick that? We're using that because it's building the infrastructure that Claude Cowork has and all that was basically OpenClaw had previously, where you have on your own computer, but now they're doing it where they're building the whole infrastructure for you in place that you can put there and you don't have to build this yourself. It's really a dangerous software. You have to be very careful with what you give it and even your data, being able to give them databases. You want separate databases and things like that. But we're doing things with email automations. We're doing data harvesting and stuff like that, where we're able to get 85% open rates in some email sequences with certain curated lists that we put together utilizing AI. We're building an automated accredited investor letter piece where we can basically have it as a hook for free for investors because I'm a CPA, and we're having AI build a financial statement to be able to do that review for them. So it takes a CPA 5 minutes to do the review and get kicked that out. What an ultimate hook, right? To be for accredited investors. And we're actually building affiliate links attached to that as well, too. So some of these things are really important from that marketing perspective. We also built I say we, but Rick built it on my team. I always take credit for his genius, but he built this prompt improver basically where I write a stupid prompt where I'm like writing a sentence and it will spit out, you are a marketing expert doing this and this, and it breaks it down in detail that I then just modify a little bit and post it into to Claude or ChatGPT or something, and it spits it out like that. We're also using like that Notebook LM for all types of content out there. We're starting to use a software called HeyGen that can translate your videos into multiple languages. We started doing education to international clients because we've raised over 50 million from Japanese clients and Chinese clients specifically, just because we've sold hundreds of houses to them over the years for their tax purposes. So we're educating them on the process and what it's like to invest here in the US, what rights you have, what the legal process and the tax process and what to expect and how to do due diligence, and tailoring it specifically for those international clients so that our international liaisons can use that content to go out to their base. Because right now, our client base is English speaking and through a couple of liaisons internationally that we work with long term, versus really making it a marketing effort to go out there and get out there from the international standpoint and helping our marketing liaisons to be able to get more leads in and helping them expand from, because that's just a whole nother level. You're talking about tons of languages and it is perfect. It speaks in my monotone. It had my lips look perfect when I'm doing it and literally spoke like perfect Vietnamese. My wife was like, like, what is wrong? What the hell? That's crazy. I was like, this is great. I can finally speak Vietnamese now. And for years, she's trying to teach me. And I'm like, my tongue doesn't do that. I can't say that. It's just too hard. Meanwhile, her parents speak super fast and I just can't keep up. It's too hard for me. But yeah, it's pretty funny. But yeah, really cool stuff and structures that you can put in place, especially on the marketing side, using it for email sequences, which is not perfect, but you can teach it to actually speak like you. You can upload all previous content as examples. If you have tons of YouTube content that you already have or other videos you've done, you have unlimited content now using that. We're even trying to figure out we know it's possible. I'm just in process of doing this, creating an avatar that looks like me, talks like me, it's not me, via AI that takes my previous content and does the same type of thing as Notebook LM, but uses it in like a content thing. Because I'm a CPA, even though I get in front of audiences and speak all the time, I don't like to. Emotionally, I'm like, no, dude, just let me be in my hole and hang out with my kids. But if I can figure that out, it's going to be amazing.
Yeah, yeah, it's definitely there. Yeah, like some of my videos that I have Hey Gen clone my video, I have 11 Labs clone my voice, so it sounds just like me. It doesn't have as much expression as I do,
Right.
but it's actually pretty good. It's actually pretty good. And then with the right keywords, the right topic, it gets picked up. YouTube picks it up just as well as sometimes even better than my real videos. So yeah, it's definitely there. One of the
It's
things
really
you
interesting.
mentioned you started to work with fund managers a lot and educating them and help making their lives easier, making their capital raising process easier. Share with us a bit about what kind of fund manager are you looking for? And then yeah, what are some of the tools that you have in place for them?
So we created more of a turnkey fund manager type job because we've sold turnkey properties for years. We used affiliate campaigns to get to 500 million lent out to flippers. And so I really try to leverage my database for people to bring me investors. That's how we sold hundreds of houses and thousands, over 1,000 houses now, is through these different affiliates that brought us investors and consistently developed relationships. So it's already in our head to go that route first. And so how do you make it super easy for people? And what are the hard parts about being a fund manager? First, the legal docs are difficult, right? Having that set up and people don't have a knowledge base about what that entails, who to go to, what to look through in the provisions of the documents to make sure they're protected for their investors. So teaching them all about that aspect of things and those provisions and the education around that, along with having a system where you have the already set up to set up those fund manager docs ready to go so they don't have to find anybody else new, and that can handle it that way. In addition to that, structuring your deals so that they get at least a point up front to cover those costs is imperative, right? Because then otherwise they're out of pocket in the beginning. You don't
Yeah.
want them to have to come out of pocket at all. And so I always even tell them, hey, start sending emails out. We'll finalize the docs. That's ready to go on our side. We'll even have the attorneys 90% of the way there for them. So that's already ready to go and it's ready to duplicate. And so that way it's just a fee and they're able to say, cool, I can put this money up for 2 months while I get these funds in, right? And then also covering the tax for the first year out of that as well. So on $1 million, that's 10 grand. That's pretty close to getting that done. Usually it's 15 for a full set of docs. You can usually get fund manager docs for 5 to 7 grand or something like that on average. Maybe it's 10, depending on the attorney you go to and stuff. And by setting that up and then also giving them our email sequence saying, look, here's what we did for our email sequence and some of the shock patterns. Now, some of the things that I do from a hook perspective, they got to change. I put on there and one of them, my kids are smarter than your kids. And then afterwards have a video of my son saying, I hate real estate and running away. And I'm like, maybe not. I'm still working on them kind of thing where it's like you pull back the insult, right? Of course, but you can do the insult to get them to be like, what? My kids are totally smarter than yours. So and then obviously asking for that hook at the end of these emails, but structuring it that way so that it's set up for them with the right educational patterns. In addition to that, we do a fund manager package with all the videos. We'll even do custom links so they have their own page that goes to their actual portal directly. And if they don't have a portal, we can always help them with Syndication Pro. We always made it so that we can do all that work for them via Syndication Pro and help with that process and the email communication. We have the CPA CPAs. We have the bookkeepers lined up for these things. We even go through and set up the entire like Google tracking sheet and mirror it for them on their side, just for their investors, for their exact thing. So their waterfalls are all set up and everything already. So it's literally turnkey for them, because how scary is it as a fund manager to be like, wait, I got to do a waterfall. How do I do that? And how do I make sure that it's right and it's tracked right and that I can see what the projections are going to be long term for this? So these are the things, if you set this up correctly, it takes away a lot of the fear. The biggest thing that you can do for them most of the time is help them utilize their current database and people that they already know. And if they don't know how to do that with their current database, showing them how to do email sequences and welcome series up front, how to nurture them. Remember, that's that 2-year window of long-term nurturing. And so we do an email sequence, just 4 or 5 emails that go out, not about our deals, but about who we are and why I invest in real estate and debt. Who is my team? Let me put Rick up on a pedestal so that people can talk with him directly for this. So they're not always just relying on talking to me, which my schedule sucks sometimes from a sales perspective to be able to book a time, right? So these types of things you're focusing on. And then I've written a bunch of stories about my life, about my dad being there for me and passing away when I was 26 and him being in the military and stuff, or how much my mom supported us in the beginning of being our very first property investor for us and stuff like that to get us going. Or I've told my wife for 20 years that I'll be retired in 2 years. Like these types of stories, and you trickle those out. They might go out to your database, but every new investor that comes into your database has never seen those. So now you go out to those long term. Maybe they come out a month later or 2 months later or something, but you trickle those out because it shows who you are as a person to build the trust. So these are the things that you want to put in place to really strengthen that system. There's no point in doing all this content and getting all that lead flow in if you don't have your foundation built with your welcome series, your consistency of your email sequences, your up sales sequence also, because most people focus on the marketing and lead flow, but they fall off massively on the sales side, right? You should be following up every week or every 3 or 4 days if they haven't gotten back to you while they're hot and on the docket. Otherwise, they're going to fall off and you're going to lose them. And your close ratio is key, but really dialing and also your sales strategy. You should be taking himself through almost not a sales script, but a process that you go through on the call that I can give to everybody that I learned actually at one of the other masterminds and stuff, that strategies that really increased our close ratio massively by being very strategic on those sales calls too, to bring them through to a final conclusion of you being the solution to their problems.
That's perfect. That's awesome. I love that. This leading our next session perfectly. So before we open up for Q&A from the audience, for those that want to reach out to you, connect with you, maybe a fund manager wants to look at what's like to work with you, where would you like to send them?
Yeah, just send them to MatthewOwens.com with 1 T in Matthew, because my parents couldn't spell. So, that's what I tell everybody. But yeah, MatthewOwens.com. And if you guys want, I do have a 200-point due diligence checklist on there that you guys can download that I use for all of my multifamily syndications that I invest in. And I give that away to investors. And think about those types of things. That's obviously a hook on that side. But you as a fund manager or operator, finding useful tools like this for the general public and the population is super important to be able to really get lead flow in. You have to give people something in order to get contact information and stuff like that. But yeah, so that you guys can obviously go to my email me as well at mpo@ocgproperties.com as well, and I can contact you guys directly because you're part of Tim's group.
Okay, you went way too fast on that one.
That's mpo@ocgproperties with an IES.com. So
Yeah, there we go.
yeah, there you go.
All right.